Okay, so we're going to get this thing going. Start off, I'm just going to need you to trust me and listen to everything I say as if I know what I'm talking about. So one of the things that we're going to do is, number one, get my face off the screen so that way you don't have to look at me anymore. But we will go ahead and get to the steps that I want to take in order for us to get started. So one of the things that you're going to do, this is roughly 8 steps. Now, granted, each one of these steps has sub-steps within them, but here's roughly the 8 steps that we're going to do. And some of them you only do once, others you'll continuously do over and over again. So the first one is step 1, open up a TradingView account. TradingView is free. Go to tradingview.com, put in all the information that you need in order to put a free account. You don't need anything outside of that. That's all you really need is that free account. From there, once you get there, we'll do this. Once you get to TradingView, here's what I'm going to want you to do. So that's the first step. Open up a TradingView account. Once you're here, you will get a layout. I have no idea what's going to be over here. You might even have a list over here that has stuff in it, in which case, I want you to take whatever's in there and delete out everything. Just go ahead and delete out every single thing that's in there. Leave it completely blank. You can name it what you want. I just named this one simple. That's what we're going to go with. I do need those right there. All right, so I marked those off for mine, but we'll come back here to simple. So that's the one we need. We'll leave it alone like that. There are 4 currencies that I want you to add to this. So you'll come to the plus sign here. You will look for AUDCAD. We're going to start with AUDCAD. I would stick with OANDA just because if you decide to move to a particular broker, I'm not necessarily recommending OANDA, but OANDA is one that you can actually trade straight through TradingView, which is really, really nice. You don't have to have another software in order to do it. The only downside is you don't have high leverage, which is okay because it doesn't really matter, especially when it sort of matters, but it doesn't really matter if you're trying to learn the process anyway, because you don't want high leverage to begin with because you don't want to blow your account too fast. So starting off with OANDA, really, really nice. They're also regulated. You have a lot of unregulated brokers out there. Your money's not protected with them. You throw your money at them, and if they, for whatever reason, shut down and blah, 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 you lost it. OANDA is very similar to like a bank. You put your money in the bank closes down, you're federally insured by it. OANDA is the same thing. It is a regulated broker. If they go down, then you can, file appeals and all this other stuff and actually get your money back. So 2 things there. So stick with OANDA in there. Add to watch list. It appears on the side right over there where the watch list is at. So that's one that we're going to get to. Euro USD is another one we're going to look at. OANDA. Add that over there. GBPJPY, OANDA as well, and then NZDCHF. So these are the only 4 pairs you're going to be looking at. Really, so the first 3, that last one is just to have another one to look at that hopefully you actually don't have a lot of trades on. Doesn't really matter the reason why. I don't like NZDCHF. So now that we've done that, you have opened up your TradingView account, you've set it up. One last thing. So next step. So we added that there, and let's do add currency pairs. And add indicator. Now, some people might be like, no, you never trade with an indicator. Well, we're going to use one indicator in particular. So come up here to this indicators tab, and you're going to look for average true range. You can type out ATR. That should pop up because it's probably the same thing. You can also type out, average true range, and it should also pop as well. Average true range. I have it started as favorite because that's one I like. We're going to set that up. We don't need all this wonderful, lovely data down here. So what we're actually going to do is go ahead and I'm going to move it up a pane. Whoop, nope. Come to the ATR, and I actually want to merge it, move to existing pane below. There we go. Oh no, it's a big mess. Okay, who cares? So what we're going to do here is we're actually going to edit the ATR to, you're going to leave the 14, wait for time closes, all this other stuff. Your ATR line, you're actually just going to make it go away, basically. Values on pride, labels, blah, blah, blah. Cool. We can leave all that alone. Right click on here, merge all scales into the one on the right. That's more preference than anything else. It doesn't really matter to me which scales you actually look at, or if it's on the left or right. But I like it on the right because number one, price is usually over here. I can actually see it. But if you like a clean thing, then you can move the scales to the left and they'll all be over here. And then you can just look at clean stuff. So don't get too hung up on that. So those are the two things that we want. The only reason I don't need the actual lines or anything like that is I just want to see the value up in the top left-hand corner here. Wherever I hover over a candle, it lets me know that this has an average true range of 28 pips. Not a big deal in regards to like, what does that actually mean? Because when it comes down to it, you don't need to know what it means. You don't need to dig into the weeds of everything. I think the equivalent that I've come up with is driving a manual. You know how to drive a manual. You know how the clutch operates. You know how to shift. You know what good you know how the car sounds when it shifts, or when you should be shifting. You know what it sounds like when you shouldn't be shifting. You know what it feels like when you shift too early, when you shift too late. All that other stuff you know how to do without actually knowing the intricate details of how the transmission works, or how the synchronizers work, or how the injectors work. Don't get into the nitty-gritty of trading. Keep it very, very simple. And so that's all I want. I just want you to keep it very, very simple. Do not get hung up in trying to learn everything there is to know, because then you will never get anywhere. And if you start searching everywhere for learning different stuff on this, there is so much stuff out there that you get analysis paralysis, you get information overload. And then on top of that, you'll end up getting conflicting results, because you look one way on how to shift a car. Well, if you looked for it on a Ferrari, that shifts a little bit different than my little Honda HRV. So it's like you can't necessarily apply what you see out there to what you're doing, because it might not fit your lifestyle. My lifestyle is driving that Honda HRV around all the time, so I can't shift it like I would drive a Ferrari. So yeah, so just stick with me. Trust me on this one. You will save a whole lot of headache if you just stick with what I'm telling you to do, versus, okay, cool, that's cool. Let me listen to this guy for a second, and then let me go find out this other dude, because he looks like, oh, look, he's got like a Lambo in his picture, or look, he has money, or he's talking about like 100% win rate, or he's talking about making $3,000 in the last trade. Don't click on any of those videos. Just stick with this, and your results will speak for themselves, because they'll be your results, and you'll be able to actually have some backing in it, versus you have no idea what's going on that other side, what that video is put out, what everything like that. So let's stick with that. So we are on, that has been step 2. Add the indicator, which was the ATR, and just keep everything base and just make it disappear. The next thing we're going to do is we're going to create a spreadsheet journal. Of course, you can just go to Google Spreadsheets. There's like 4 or 5 things that you need in this journal area here. One thing is, we're just going to do win or loss. One thing is you need the date, you need the time, roughly the time. It doesn't have to be perfect. This will just help you later on when you want to go actually look back and see. It's like, okay, what date? Okay, cool. What time was this trade taken? Pair, the pair that you're going to be doing, since we have the 4 pairs that we're looking at, an entry and an exit screenshot, whether it won or lost, and then some notes on there. Some notes that you might have seen. This actually comes later on when you look back over your journal during the optimize step, or actually step 5, during the find the consistencies part. You'll see what happens there. So this whole entry and exit thing, we'll actually go through and do one of those to see what it looks like. So once you got that spreadsheet going, we're going to move up to marking up the charts. So marking up the charts, here's basically what you need to do. There's a little reset button. I don't know if you saw me click it. Reset the chart. Let it sit right here. All right. Down here is where current price is at. The only thing I want you to do is look at this chart and figure out, look at it with a very simplistic viewpoint and go, where do I see support resistance, or where do I see a floor and a ceiling? And so straight view, what we're going to be looking at right here is, if we just were to look at what price has done, we have just someplace right in here somewhere that caused price to bounce away from it. Now, once price broke through it, it came back through and for some whatever reason caused price to not be able to break back above it. So we have our support that turned into resistance, or we have our floor that turned into a ceiling. Either way, this is what we've looked at. Now, given what we've seen right now, there is a high probability that when price comes back, you're going to get some sort of reaction. Those are the reactions that we're looking for. And you see it happen all the time. This was a floor that turned into a ceiling. And once price came here, it bounced away from that ceiling. That's all we're looking for. Support and resistance. Very, very simple. Try not to get, you can zoom as far in as you want. No, that's why this button right here is beautiful. Leave it alone. Reset the chart. If you find yourself zooming in for stuff, reset the chart, leave it alone. Just look at it simplistic. What you see right here. What do you see? What can you use? Okay, cool. So wherever price is at, if you will take the horizontal, you got a bunch of tools over here. There's a horizontal line and price is right here, right in between, somewhere between this ask and bid price is right there. What you want is you want two levels above price. That at that point in time would be the resistance or the ceiling. And then you also want to be able to find 2 points that are below price. That would be the floor or the support. So right where price is at, these two are good, but I actually have another one right about here in that area. Price is not perfect. Price is not precise. And so anytime we look at these lines, they're actually going to be zones. They're going to be areas. So most people will generally use a box. If I could, I'm just gonna bring up my favorite tools. Somewhere in here, that's where it was at. Somewhere in here, you're gonna, just draw a box. Here's where your mind is gonna be like, well, yeah, but how do I know how big to draw the box? Draw the box with what makes sense to you. This is your art project. This is your science project. You're drawing what makes by your own observation, what makes sense to you. Don't overthink it, draw it, because it's not even this that actually matters. It's the process that happens after this. And so when it comes down to it, it's more about your process than it is about how you drew a particular box on the chart. So we have the two above, two below. Now I need to find two below. So I'm going to zoom out for this. Why? Because I don't have another one. Could you possibly use, let's reset the chart to make sure it looks right. Could you possibly use something like this? Yes, you could. Prices come down into here, bounced away, and now we're back at this area. But unfortunately, it's already come to that area. And so could you use it? Yes, especially when you're starting to forward test or, start later on. But like that would have been a perfect example. We'll use that a little bit later on to be like, okay, what would this have looked like if I would have set up my trade? So since I can't see anything here to give me two supports to begin with, I need to zoom out. So I'm just going to zoom the scroll bar out and find something. What do I have? Well, had we had price somewhere over here, this would have been a good place to have something. Got to zoom out even more. Okay, here we go. Now we have something as well. Now, I've zoomed out and I found these areas. I didn't zoom into any of this mishmash there. I just zoomed out to what made sense. This makes sense. Since I have to zoom out, I have to leave it the way it is. I'm not going to zoom out and then zoom into here to try to find, well, there you go. You have this right here. It bounced, it bounced, it bounced, it bounced, bounced there. Like, no, we zoomed out, we leave it out. Don't zoom in. So that's one area, and I might not have a second. Let me reset that and zoom out again. All right, what makes sense? Probably that one right there. And so one thing through my observation that I've seen is If you want a stronger level of support, you need to have one that's been tested in the past as resistance. And so something like this, which you'll see on the chart, you'll see it all over the place, where you've had a resistance before, it finally gets broken above and is acted as support. Why wouldn't I use this one here? Well, because in the previous time before it, it wasn't acted as resistance. You'd have to come all the way back over this way to do that, which completely and totally valid if it makes sense to you. To me, it doesn't make sense. So it doesn't matter. I'm going to come down here and leave this one alone. That'll be my next zone. The more you get into the markets, the more you see it's really not about how you draw your zones or where you draw your zones. It really is about the process that you're going to take once price gets to the zones that you've drawn. What are the triggers that are going to make you want to get into the trade? That trigger that decides whether or not you want to get into a trade, intuition. Intuition comes from you seeing the same thing that happens over and over again at the particular zones that you've drawn. And so it doesn't matter if you use the zone above that I said I nixed out. And it doesn't matter if you use this zone. What matters is the process that you're going to take whenever you get to this zone or whatever price gets to this zone. Are you going to get into a trade or not, based upon what you've seen repeatedly happen over and over again with the zones that you've drawn? And so try not to harp on making this perfect. There is nothing in trading that needs to be perfect whatsoever. Not your execution, not your entries, not your exits, not your stop loss, none of that. And none of those terminology actually even matter. What matters is you just setting up the process, whatever the process is. You can call it whatever you want. You can call an entry your position side, your position. You can call an entry your, I just don't try to complicate it. So moving on to that, this is no good. Okay. So we have the two below and the two above. Two above being these two up here. Now, this is where now we've marked up the charts. We've marked up the charts and we're going to journal what happens. If for some reason this was last week on Friday, I'm on the 4-hour time frame. I didn't say anything about the time frames. I would recommend sticking with the 4-hour. You have a couple different time frames to work with. Given your schedule, given majority of people's schedules who are already working a 9 to 5, doing anything less than the 4-hour is probably asking for way too much commitment. 4-hour and daily, probably a good sweet spot there. Anything above daily and you're waiting so long for the market to actually play out that you will probably not want to stay committed to actually seeing if this works out or not, to actually investing the time to become successful at it, because it just takes forever. Is that something that can happen later on? Absolutely. But for right now, I would say 4-hour and daily, and I would highly recommend the 4-hour. The 4-hour should give you enough, especially with the 4 pairs that we have right there, should give you enough chance within a day, by the end of the day, or whenever the particular alert goes off. In the beginning part, should give you enough time to be able to look at a chart and decide whether or not this would be a trade you'd be in. Take a screenshot of that journal, or take a screenshot of it, see how it plays out, put it in the journal, and then that would be that for the entire, for that entire week or however long that takes. It wouldn't be too much time, too time consuming. So I would stick with the 4-hour and run with that. So had this been last week, so we're talking like Friday time frame of last week, this is what we're looking for. This would have been the zone. If we would have not seen anything and we had price is coming down, price has broken through this level and finally dropped a bit away, this would be like, okay, here's my zone. My zone's right here. And it's like, okay, if price comes back into this level, this is where I would take a trade based upon, whatever my reasons. Right now, your reason can be pretty much anything. Your reason can be, well, because it comes into the zone and just comes into the zone. So that comes into the zone. And let's say we take an entry as soon as it hits the zone for a stop loss on when you decide, when it's like, I feel like I would be wrong about price bouncing away from this level. Roughly, this is 27. So we're going to come over here and right in the middle of that box, 27. We want that to roughly match up there. So above the zone that we have, 27 pips is where if price got to this level, we're probably wrong. It's not going to go down from here. And if you think about it, that makes sense. When price comes through these levels and breaks through and comes back and touches them, it either comes a little bit into it or maybe a little bit past it, but definitely not halfway through to the very next level. You look at any of these particular ones here. You broke through here, price broke through, came back, and there's a little wick above it. Came back, little in the lower quarter. Came back, very high quarter. You know, not way up here. So if it comes up there, chances are we'd be wrong. And so this is roughly what the trade will look at. We'd come to a 1-to-1. So basically whatever we risk, whatever we're risking is whatever we're going to be making. So risk $100, make $100. Risk $10, make $10. Or lose $10, make it whatever you're risking. Right now, it's not about the money. Right now, it's about the process. And so this is how this would look out. We would come up here on this camera thing, take a snapshot. We want to copy the link. Once we copy the link, it'll say, hey, the link is coming to copy to the clipboard. We'll come to the trading journal. We will, in our entry, we will paste that link. That was for Euro USD. And it was Friday, whatever Friday was. Friday was the 15th. So 2023, you can do your date however you want. And what time was that? That was the 9 o'clock candle. So I'm going to put 09. That's it. This would set up. That alert would go off. We'd come in, we'd be like, okay, cool. Yeah, it looks nice. It comes down here. It's coming into the zone. I'm just taking the trade. Doesn't matter. You don't have to have a reason why. This is not about the reasoning aspect. This is not about the optimization. This is not about finding consistency yet. This is just taking screenshots, images of what has happened, putting it into a journal. That way that we can come back to that later on and go, okay, what do I see consistently happening in the market that I can find a profitable edge off of? Simple as that. So this trade has not fully played out yet. Right now, price is still in the middle of this trade somewhere. And so it's basically going to be sometime this week, because we're Sunday and markets open in about 2.5 hours, 2 hours, 15 minutes. It'll be sometime this week where this actually opens up and we'll see if it wins or loses. So once that happens, then we'll come back to the journal. We'll give our entry. We'll say whether it won or lost, and then we'll write some notes. Notes can just simply say, you know, I saw a support area, or I saw a floor. You can call it whatever you want. Saw a little bouncy area that was on the downside. I saw a bouncy area on the upside, and it bounced off both. Bounced off. Well, that wasn't a support to begin with. It's a support now that was broken. Saw that price came back into it. You know, put a little touch in the level, and I'm just taking an entry based upon that. So that's that. Set up that. Let it go. Do that for every single pair. You come through here, come on the 4-hour, hit that reset button to get everything aligned up. Put your horizontal line on where price is at, right there in between the ask and bid. Find a level above price. So you have a recent level here that you can use. You also have this one seems to be more important. You've had such big moves off this guy compared to this little move off this guy, but not saying that this is not a wrong choice. So, you know, you draw your level there. So I got my 2 above. What's my 2 below? Well, I do have this level here. And then I can come further down to this level here. All right. So I got my 2 above and my 2 below. And then, yeah, that's pretty much it. And we would see how everything would play out. Areas marked up. We're ready to go. So GJ, same thing. Let's reset the chart. we have a level here. It's been tested twice. You could say possibly, depending on how big you drew your zone, you could say that's a level as well. We definitely have this level here that hasn't been touched in a while, was definitely a support, created a bounce off that. For whatever reason, don't know why, don't need to know why. We just know that it's happened before. And then something way down here. Don't know what that was about. Don't really care though. I just need an area that sort of makes sense. Looking on the chart, it's like, yeah, price bounce from there. Is there a high probability price is going to bounce again? A lot? Who cares? Don't know. If we go back to that Euro USD trade, you'll see the bounce that we're looking for is actually not even further than the break that happened. And so when you look at particular things like that, it's like, and this is something you just got to keep getting into. When you look at price like that, so here's a pounce, a break, everything like that. At this point in time, we're looking at like 22 pips above there. Let's go somewhere about right there. Take an entry as soon as it comes in, coming in for a 1-to-1. That's what that trade would look like. If we were back here on this particular day and we said, okay, cool, there's my zone right here. As soon as price breaks through it, if price comes back to this zone, I'm taking the trade. Taking the trade, tracking the trade. That's all you like. That's all you're doing. You're not trying to analyze why you should take the trade. You're not trying to figure out if you shouldn't take the trade. You are just placing this toolbox, marking it up on the charts, and journaling it. We will get further into that as you continue to go further in this, as you continue to grow, as you continue to do all sorts of other stuff. Right now, it's just about collecting the data. The data is important. So you take the entry, cool, boom, that one. Take an entry screenshot, take an exit screenshot, write down that one, blah, blah, blah. Continue going. That's it. Don't make it complicated. So we got them all down. Cool. Marked up our charts. We've started journaling what is happening, and then we will find consistencies that produce an edge. So what are the consistencies? Well, at that point in time, this is where we start looking at the journaling stuff that we have. What do you generally see? Okay, well, what I generally see is the first time price breaks through an area and comes back. So first time price breaks through an area and comes back, you get a good reaction. The second time, also, you can generally get a good reaction. On the third time, though, I don't know. I just see through my data that all that I've collected, that every time on a third time, it just doesn't work. This one happened to work. Will that always be the case? No. You won't know that, though, until you actually get the data, though. And so once you have that data, you can go, okay, cool. If it's the first test of a previously broken resistance, I'll take it. If it's the second test of a previously broken resistance, I'll take it. Well, the third one only has like a 55% success rate of continue to break through. So I probably won't take those ones. That's something that the data is going to tell you. That's something that your trading journal is going to tell you, is as we look through these, what has been consistent and what can we work with in order to make a trading plan to tell us, to dictate how we should actually trade these particular zones. And so let's move to the next one. And then we optimize. This is where, okay, now that you find consistencies, you create your trading plan. It's like, okay, cool. I'm going to do support resistance, breaks and retests of those, or I'm going to do support resistance. And as long as it's been there for, as long as price has bounced away from it for whatever time that looks right to me, based upon your observation, then I will take those trades and we'll see how that works. And then you see what works. If for some reason, all of your breaks and retests, you are doing phenomenal on, but the support ones that you seem to be taking, those are hit or miss. Why? Who knows? Who cares? Stop doing them because they're hit or miss. If they're bringing down your edge over the market, stop doing those things. Let's consistently focus on the things that are working. The breaks and retests. Maybe there's something else that catches your eye. Maybe you happen to see a particular price action pattern, a price action setup that you're like, every single time I see this, I generally get good results. The only way to know that, though, is to track it in the journal. And so that's what you do. So you're doing all this, and you can do it back testing. So you can come into the trading view, and you can back test. You'll come back here to the replay mode, click the button. Now, I believe you can only do monthly, weekly, daily on the free plan. The concept's the same, though. So whether you jump out to the week or the month or the day, the concept, the idea of finding areas of support that turn to resistance, which that was not a good selection of one. Minor support here, support twice, broke through, and then finally came through and touched right there. So it's like, if this were, if we were back testing this is roughly what that would look like. So the idea can be applied to higher time frames. So don't get caught up on that. But if you want to back test it, you can do something like the daily, and you can come here on the daily time frame and go, okay, well, like there's an instance right there. So I'm going to clean up the chart for a second. So if we were here, and it's like, okay, price is right here. Price is right here. That's where that candle's at. I need a area above price, an area below price. We have an area here where price is currently at. And so I have that right there. Now, this is not a valid area because nothing's actually happened from it. It's bounced from it, but that bounce has already happened. I had no idea that bounce was going to happen. Nobody in this process probably understood this bounce was going to happen right here. I didn't know it was going to happen. But in my planning for the future, if price breaks this area, since we've had a bounce out of it, support can turn resistance. The floor can turn into a roof. And so that's what I'd look for. So as we continue moving forward, price breaks through this area. I now have my level here. That's another one right there. Would that have done anything? Let's see. So I already had that floor marked out. We are at 71 pips. So I'm just going to have this at 71 right there. Come up to the actual entry right there. And come in there. So that would have been the first trade setup. Now, as that plays out, the second trade setup plays in. And this is where it's like, okay, well, I already took the first trade. Well, mark up for the second one too. How would that one have played out? Given these areas here. So this first one, we would have been, we would see where we're at there. That's also 71. So let's stick there at 71 ish. 1 to 1. All right. So that second trade would have played out, and it looks like we're getting ready to break on the first one. Oh, or did we? Nope, we came close to TP. We also came close to stop loss. That one's not playing it. Well, there we go. It finally broke through. So this would be break even. Like we didn't lose. We ended up making 100 on the second trade, but we ended up losing 100 on the first. So this would have been break even. But the process you get to see is like these bounces happen. Now, how do we capitalize on those bounces? This is where that trading journal is going to come in. And the optimization process doesn't necessarily take long if you are diligent in doing your visual observations throughout the week. When you're actually looking at this and going, okay, what do I notice about how price moves? Am I looking for particular things? Is when I look at price, if I notice that this was a downtrend, would I have taken a buy in a downtrend knowing that price looks like it's going to continuously go down from here? Well, maybe not. Maybe that sort of process would have helped you stay out of this trade, but made sure that you got into the second trade. You don't know that. You won't know that until we get into the markets and continuously track these things. And so, yeah, you can do that on the daily, even though I would say forward test on the 4 hour. That way you're not waiting for a long time in order to actually get your trades going. Let's come back to the notes. Optimize forward test and demo. So this is where you get the forward test actually in demo. So what you would do is in TradingView, you can open up a demo account, paper trading, connect it. Cool. Here it is. I'll have to clean up this one because this was a demo for me basically. So create paper trading account, call it, you would call it whatever you want. I would recommend starting this account with whatever you actually would feel comfortable risking. So if you had $500 you're like, you know what? After going through all this process, I see I have an edge. I want to see moving forward, would I be able to capitalize on that edge? Because doing stuff in hindsight is great. What we're going to learn now is a couple different things. We're going to learn, does it fit your lifestyle? Does trading the 4 hour, when the alerts go off and you're supposed to be getting into a trade, do you have time to actually get into that trade? The other thing you'll be learning is, well, this is where your fear, your FOMO, and your greed are going to come in. Fear is once you start, you're going to have a fake balance here, but this is an account that you have to keep, that you're going to be accountable for. So, if you were to be like, hey, I need some help with my trading. I think I'm doing good. And I would like, hey, okay, well, let's look over your paper trading account. Well, if you said you've been trading for 2 months on this account, but it only has a month worth of data behind it, then I know that you've reset that balance. And that's not actually accurate. So there's a little bit of accountability there of wanting to try to keep the account going the way it's supposed to. And so start with whatever you're going to start out with, whatever you feel comfortable with. That is completely and totally up to you. Not what it is. Commission. Is there commission? I would say, what, let's do 3%. 3%. Whatever you make, 3%, that's a $3 commission on $100. Yeah. So let's do that. Now you have your trading account ready to go. You're in the markets. You have your zones marked up. You can set alerts. Those are alerts for other things. You can set alerts on the free one. I don't know how many alerts you actually get. There are, with it being the 4 hour time frame, every 4 hours a candle closes. So and it starts on New York Eastern Standard Time. So when I'm saying that the market's going to open up in 2 hours, that is 5 p.m. Eastern Standard Time for New York, basically, because that's what they're tracking. And so every 4 hours, a 4 hour candle closes. The 5 o'clock candle opens. By 9 o'clock tonight, it'll close. Another one will open. By 1 o'clock in the morning, it will close. And then by 4 o'clock, another one will open. And then same thing, repeat over and over and over again until the end of time. And so you can easily set alerts. You're only watching 4 pairs. It's like, okay, I know right here that this is where price is at right now at 1 o'clock. Well, chances are I'm not going to get into this in the next 4 hours because this candle is probably not going to close in that point in time. So at 5 o'clock, you can look back at this chart and go, okay, where's price at now? Well, it's down there. Okay, cool. Well, then I definitely not going to let me come back at 9. 9, nothing. Okay, still nothing. 1 o'clock in the morning, you're probably sleeping. 5 o'clock in the morning, you might have been awake. Okay, well, you might not be awake. Maybe you didn't wake up till 9. Well, cool. The question then being, at 9 o'clock in the morning, when you come and look at this chart, you would ask yourself, would I have already been in this trade if I was awake at 5? And the answer is yes. And if the answer is yes, then basically you set up the trade, whatever it would be at. So you'd set up your stop loss, you set up whatever it would look like to a 1-to-1, whatever. And then you place the trade. In here, unfortunately, because the market's closed, even on paper trading, I can't set up the actual what the trade would look like. But over here, there is a button that says, place trade. And I actually think I cleaned it off before. There's a buy and sell up here as well, but you got to be very careful with those ones. I would get those out. I think I took them out in settings, trading, the buy sell buttons. I got rid of them because you need to work on it differently. So get rid of them here, and then work differently. So you'd be in this trade. You might have gotten a better price. So maybe you, when you set up the trade, it was way up here. Well, according to the 1-to-1, this is where your target's at. That's still where you're going. Now, what does that do for you? Because you had a better entry than the very start of this zone, instead of making $100, you're actually going to make $166. And so it actually works out for your benefit. Sometimes it does that, sometimes it doesn't. You won't know when it's going to happen. This is where some of that greed and fear comes in. Because greed being, well, what if I just wait till all of my trades come up to the top? If you try to make that choice without actually journaling it to see if it makes sense to make that choice, that you're doing it out of greed. Let's say you get here, you missed this for whatever reason. On Wednesday, you were just dog sick and didn't do anything. Thursday rolls around and you wake up early in the morning. This is 1 o'clock in the morning and you're up at 5 and you're like, oh shoot, I should have been in that trade. I'm going to go ahead and take it now, even though it's way down here. I'm going to set my stop the where it would be. And I'm going to go for my 1-to-1, or even worse. You're like, no, I'm going to set my stop the way it would have been up here, but I'm going to do it down here. And we're still going to go for a 1-to-1. Or no, we would have gone for the 1-to-1 of where it would have been when my stop was up there. So now we have this, but your entry's down here. Well, now you're risking over $100 for maybe a $20 gain. That's terrible. That is fear. When you look at the market and go, oh no, I missed it, I need to get in now. No, if it's not part of your trading plan, don't do it. So don't worry, don't get too caught up with that. Right now, the idea being, and yeah, we are so far ahead of ourselves because really we're on the step 7 now, but I need you to start here. Steps 1 through 4. Once you have steps 1 through 4, then I need you to come back to me so that we can actually start finding these consistencies within your own journal. I don't want to go through the markets and find consistencies. I want to see how you have drawn your zones and how prices played out when you in the zones that you have drawn, so that we can look at those and go, hey, did you pay attention to that? Did you see that when that happens over and over again? Like I've seen 3 trades like that. Is that something that consistently happens? Let's work with that. Sometimes take an outside eye because you've seen it over and over again. You might just pass it up. So that's what I'm here for. So let's do steps 1 through 4. We will work on 5 through 8 later on. So hopefully I covered everything. If I didn't cover anything, and there's a question that needs to be answered, ask the question. You can either ask it in the comments below, or you can text me, or you can Discord. That is pretty much it, actually. So yeah, let me know, because it's been a fun journey for me. I've enjoyed it. It's been a lot of fun. My trading is definitely changed, and all I'm doing right now is just slowly building up my account so that I can hopefully take over 1 or 2 bills with the profits from that account as I continuously compound it and grow it. And then from there, I'll start taking over 3 and 4 and 5 bills. And then I will take over my salary. And then I will hopefully take over somebody else's salary. And then from there, I don't know. At that point in time, I'm hoping that that I will be able to get to a point where I get to spend a lot more time with family, that we can just go places. We can travel as a homeschool family. It's great to be able to go places that we're learning about, like, oh, the Revolutionary War, you know, took place in Virginia. Some of the battles. Let's go look at them. Let's go and go see them. I want some of those remember the Titan moments where you took them to the battlefield and gave them that imagery of what happened there. I want some of those, you know. I want to go see, okay, we're studying Egypt. Let's go. Let's go fly to Egypt. Let's go spend time there. Trading is one of those avenues that can get you there. And because it's digital, it's all online, you can do it from anywhere in the world. And so yeah, that's my goal. And so let me know if you have any questions. Yeah, that's pretty much it. All right. Take it easy.